So, welcome back, friends. Very important day for the US markets tomorrow. We have the all very, very important consumer price index about to come. And tomorrow, before the market opens, it will be released at 8:30 a.m. Eastern Time. We have seen a rather benign jobs report with the economy losing 28,000 jobs. That is much worse than the anticipated increase of over 40,000. So the jobs report came in perfectly fine for the US Federal Reserve to keep interest rates away from rising. But now we look at the CPI and then the PPI numbers on Thursday. CPI numbers very crucial. They are expected to show 0.2 percentage increase in the headline numbers, and in the core CPI expecting a 0.1 percentage rise. So on an annualized basis, that would come to 3.4 percentage for the headline indices, and it would come to 2.5 percentage for the core CPI numbers. Should this change or it turn out to be less than the figures that I have mentioned, so less than 0.2 percentage increase for the headline inflation and less than 0.1 percentage, that will show an extremely benign inflation numbers, which I don't think is likely. There is a small chance that the inflation may turn out to be higher than 0.2 percentage for the overall headline inflation, and over 0.1 percentage for the net core inflation. Should this increase these benchmarks that I have mentioned, that would mean that the Federal Reserve at its policy meet in September may have to consider a small increase in interest rates. Now, this is something which can really roil the financial markets. That's why the consumer price index figures to be released tomorrow at the Fed before the Federal Reserve meeting in September. This is going to be one of the very important parameters, and which will be also very much discussed in the Jackson Hole meeting in Wyoming later this month of August. So now it's anybody's guess where we are headed from here, and one can stick one's neck out and say which way you feel the CPI numbers can move. But I believe that the numbers that may come out may be a little hotter than expected. I could be wrong, because this is not an easy metric to measure. There are so many factors, and the CPI may turn out to be much hotter than anticipated, which can definitely not be very happy situation for either the US financial markets or, for the matter, global financial markets, because then that would say that already there was a 9-3 split in the vote in the last meeting, and 3 dissenting members from the Federal Reserve, and Lisa Cook also now saying that they may consider small hike in interest rates. So we have a rather difficult situation. If these numbers turn out to be hotter than anticipated, that would mean the Federal Reserve may have to tighten its screws and start nibbling in some interest rate increases beginning September. This would not augur well for the AI stocks. This would not augur well for the US stock markets in general, and could throw them into a tailspin. So we will closely watch and monitor the numbers that are coming out tomorrow. That, combined with, of course, the PPI to be released on Thursday, and a very important retail sales data coming on Friday. Plus also one more, which is very closely watched, the personal consumption expenditure, the PCE index, that the Federal Reserve closely watches. All this will dictate the future of the markets. Don't forget that much of the AI stocks which are there are a part of the growth stock story, and they are basically a discounted value of the future cash flows. So what you would expect to earn in the future, discounted to the present by the Fed funds rate, that will give you the present value of the cash flow. Now, should this turn out to be adverse, it would mean that the discounted value of the present cash flow would decrease. And with even the price earnings ratio being maintained as constant, if the discounted value of the cash flows or the earnings, the denominator is coming down, you would anticipate the price or the market price of the AI related stocks to also move down in sympathy. Don't forget that much of the current rise in the US indices to all time highs has been piggybacking on the AI related story. The way the AI stocks are moving has been a great comforting factor to the entire boom that has happened in the stock markets in the United States, in Taiwan, in Japan, in South Korea, the Kospi index. So you may think that the US CPI numbers may impact only the US stock markets, but not really so, because this number can definitely have an impact on world financial markets. You will see the South Korea market, which has a high beta, with just two stocks, SK Hynix and Samsung, holding over 40% of the Kospi index. So very much an AI related story. Taiwan similarly, Taiwan semiconductors and others, a very large portion of the Taiwan index. And these are all a part of the entire AI related story wagon. And they very much have been comforted from low interest rates in the United States, even in Japan. Japan is getting corrected a little bit. So we had, in fact, the yen falling to all-time lows versus the dollar, to the extent that there was a joint central bank intervention from the Bank of Japan, and also the US monetary authorities the US Treasury did intervene to be able to prop up the yen and therefore support the dollar. Now, should this continue in the US markets, by the Federal Reserve having to nudge in interest rates, which of course is a very, very low probability at this point of time for it, because Kevin Walsh has been appointed by President Trump to try and reduce the interest rates indirectly, although he says that Federal Reserve is an independent body. But should the CPI figures turn out to be much hot than expected, then the entire calculation story starts going the other way around. Be careful. It's my expectations that the CPI numbers may not meet expectations and may turn out to be hotter than anticipated. If for some reason they turn out to be much more benign than what I think, and many other economists think it will be a benign number, but I just have my calculations. But anyway, should it turn out to be benign, good. That means that the AI story is here to stay and the market should cheer it. So that just I presented my analysis for a very important report coming in tomorrow. Stay tuned, and if you're still not subscribed to my channel, then do that, and do share our videos with your friends, relatives, business WhatsApp groups who would like to know more about the US economy, US stocks and its future. And of course, you're welcome to join our Telegram channel by WhatsApping us 732-732-2720. Have a great week ahead. Take care. Bye-bye.